Hello students. So this is another lecture session on insurance claims. In the previous lecture session I have given you an assignment which I believe many of you have attempted and some of you have done it successfully. So yet I got some messages from many of you that you had certain confusion regarding its solution. So I am solving it once again. So if you look at the screen, you have the question. A fire occurred in the premises of Sri Ramesh on 1st April 2018 and a considerable part of the stock was destroyed. So the fire occurred on 1st April 2018 in which a considerable part of the stock was destroyed. The stock salvaged was 1,12,000. That means out of all the stock valued 1,12,000 could be saved. And this person, Sri Ramesh, had taken up a fire insurance policy of rupees 6,84,000 to cover the loss of stock by fire. So the question wants you to ascertain the amount of claim due from the insurance company for the loss of stock by fire. So like the previous questions, you will again have to calculate here that to calculate the amount of claim that the particular insured Sri Ramesh will make with the insurance company and can claim the money. So the information provided, first you have purchases for the year 2017. So see 2017, that means it provides information for the previous year. Okay, the fire occurred on 1st April 2018. Sales for the year 2017, again previous year information. Purchases from 1st April 2018 to 1st Jan 2018 to 1st of April 2018. That is from the beginning of the current year to the date of fire, 7,28,000. You have the amount of sales from the beginning of the period to the date of fire, that is 1st Jan 2018 to 1st of April 2018. So these two information relate to the present year, the current period. You have a stock on 1st Jan 2017, again previous year information. You have the opening stock of the previous year. Again you have a stock on 31st December 2017, that is the closing stock of the previous year. Wages paid during the year 2017, again wages for the previous year. So you have previous year purchase, you have previous year sales, you have previous year opening stock, you have previous year closing stock, you have previous year wages. So obviously we can understand that we need to find out the gross profit of the previous year. Okay, so let's proceed with the question. You have wages for the present period, 1st Jan to 1st of April 2018. Then it says Sri Ramesh had in June 2017 consigned goods worth 2,000 which were lost in an accident. So in the previous year again there was a consignment of goods for 2 lakh which was lost in an accident, no insurance, and the loss had to be borne by that particular person, Sri Ramesh. Now in the last paragraph it says that stock at the end of each year for until the end of calendar year 2017 had been valued at cost less 90%. That means whatever was the cost, it was valued 10% less. From 2018, however, there was a change in the valuation of closing stock which was ascertained by adding 10% to its cost. So then what happened? From 2018, okay, from the year 2018, what they did is that they made slight changes. What they did is that in the valuation of closing stock, okay, they ascertained the value of closing stock by adding 10% to its cost. Okay, so we'll deal with all those adjustments when we do the numerical. So I expect you to write down this question in your copy, so as we move forward with the solution. So from the question we can deduce that we have several information related to the previous year, we have information related to the current period. Okay, so with regard to the previous year, we have the opening stock, we have the amount of closing stock, we have purchases, we have sales, and we have the amount of wages. With regard to the current period, the closing stock of the previous year will be the opening stock in the current period. So we have the opening stock of the current period. We also have the information of purchases, we have the information of the sales, we have the information of wages. So opening stock, purchases, sales, wages. These are the information that we have for the current period. So for the current period, we have two information missing, that is closing stock and the gross profit. For the previous year, we have only one information missing, that is the gross profit. So it indicates that we have to prepare the trading account of the previous year for the year ended 31st/12/2017. Find out the gross profit. Find out the gross profit. Then find out the gross profit rate and use that rate to calculate the amount of gross profit in the current period, and then find out the closing stock, because we need the amount of closing stock. Closing stock is the amount of stock that was burned on the date of fire. Okay, so we proceed with the information provided, and obviously there are certain adjustments regarding the information. So the first information that we have related to the previous year is the opening stock. Opening stock amounted to how much? If you look at the question, and I believe all of you have written down the question in your copy, and if you have not, you pause the video, go back, write the question in your copy, and then proceed with me. So the opening stock, you see, it is given for the previous year. The opening stock is 5,76,000. But you see, in the last paragraph it has been provided that for all calendar year up to 2017, what was done is that the stock was valued at cost less 10%. So that means 5,76,000 is only 90% of the value of the stock, because it was valued at 10% less. So we have to now find out the full value, that is 5,76,000 into 100 divided by 90. So the amount comes up to be 6,40,000. That is the value of opening stock. Then you have next the amount of purchases. It's given 2 purchases. The amount of purchases is 37,52,000. 37,52,000. Then what you can do is that you deduct consignment loss. You have seen in the question, in the year 2017, Sri Ramesh had a loss by sending goods to consignment worth rupees 2 lakh. Less loss on consignment amounted to rupees 2 lakh. So this was another loss. So it now comes up to be 35,52,000. Then you have in the question provided the amount of wages for the previous year. The amount of wages is 4 lakh. Then you have the amount of sales. In the previous year, the amount of sales is 46,40,000. And then you have the amount of closing stock. The amount of closing stock is how much? You have in the previous year, stock on 31st December is 9,68,000. 9,68,000. Again, I have written this amount in the inside column. Why? Now see, you have an adjustment with regard to the closing stock also. What it says is that up to 2017, all these opening stock were recorded at 10% less, and closing stock were recorded 10% more by adding 10% to its cost. Now we are related in this question to this particular period 2018. Here, when everything was normalized. But in the previous year, things were not normal. Opening stock was recorded 10% less, closing stock was recorded 10% more. And the purpose of preparing this trading account is to find out the gross profit. Using the gross profit, we will find out the gross profit rate which we will apply in the current period. And hence, we have to find out the correct value of the opening stock. We have to find out the correct value of the closing stock. Hence, what we will do is that we have to make these adjustments. So 9,68,000 is represented by how much? 110%. But we need the 100%. So into 100 divided by 110. 9,68,000 into 100 divided by 110. It comes up to be 8,80,000. So these are the information that we have due to the previous year. Okay, now we add both the sides. So we get 55 lakh 20,000. On the credit side, which is more, so we arrive at a gross profit. The gross profit amount is 9,28,000. 9,28,000. So that is the gross profit. Now what we will do is that we have to calculate the percentage of gross profit. So how we will calculate the percentage of gross profit? So see, it represents how much? 9,28,000 divided by, so the sales was 46,40,000. So gross profit divided by sales into 100 percentage. So the gross profit is 20%. If you calculate, the gross profit comes up to be 20%. Okay, so the gross profit rate in the previous year was 20%. Okay, so now with regard to current period, we have the opening stock. The closing stock of the previous year will be the opening stock in the current year. So opening stock in the current period comes up to be 8,80,000. We have the amount of purchases given in the question. The amount of purchases in the current period is 7,28,000. Next you have the amount of wages, that is 72,000. Two wages, 72,000. Next you have the amount of sales, 9,60,000. Buy sales, 9,60,000. And then you have the amount of gross profit. You don't have it, but you can find it out. How you can find out? You have the percentage of gross profit, that is 20%. And the amount of sales is 9,60,000. So 20% of 9,60,000. Okay, 20% of 9,60,000, it comes up to be 1,92,000. 1,92,000. So now the closing stock is your balancing figure. The closing stock is your balancing figure. So if you add both the sides, okay, so on the debit side you get 18,72,000. 18,72,000. And on the credit side you have less amount. So the amount of closing stock will be the balancing figure, that is 9,12,000. 9,12,000. So we have got the amount of closing stock on the date of file. So now we have to calculate the amount of loss of stock. So statement showing loss of stock. So value of stock on the date of hire was how much? We have calculated by using the memorandum trading account. It was 9,12,000. 9,12,000 less value of stock salvaged. So you have in the question provided that the amount of stock salvaged was 1,12,000. 1,12,000. So there was a loss by fire for loss of stock by fire was 8 lakh. So now the question is, this is the amount of loss of stock by fire, 8 lakh. Now will Sri Ramesh get all the money? So we'll have to check that whether the average clause is applicable or not. Okay, now see the amount of closing stock. Amount of closing stock on the date of fire was how much? The amount of closing stock date of fire was 9,12,000. was 9,12,000, and the value of insurance policy was rupees 6,84,000. So the policy was taken for 6,84,000. Hence, you can see there is under insurance. So average clause will be applicable. So therefore, amount of claim that Sri Ramesh can make with the insurance company is not 8 lakh but an amount less than 8 lakh. Okay, so it is 8 lakh into 6,84,000 divided by 9,12,000. Okay, he will get only the proportionate amount of the loss depending on the amount of insurance he has taken up. Okay, and the amount comes up to be rupees 6 lakh. So Sri Ramesh will get only 6 lakh rupees out of his total loss of stock by fire amounting to rupees 8 lakh. So this is the solution of this particular numerical. I hope it is clear to all of you. So again, if you have some confusion, you can call me, text me, or write in the comments section. Thank you.